Welcome back to the channel, Crypto Trend Trader here. Today we're going to be taking a look at Bitcoin, but before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So, as you can see, we obviously got that push down like we were talking about, and got a nice clean chart today because we're going to focus on a couple different things, and that's going to be our standard indicators. So what we have here is the stochastic, the RSI, and the MACD, and these are all just your traditional, like most common ones on TradingView. And the idea and reason is we're on the daily chart here, and what we're looking for is essentially potential like reverse point based on divergence. So we're looking for some potential divergence to, essentially show itself based on our various like pivot points, like highs and lows. In this case, we're paying attention to the lows, and then we're paying attention to the amount of strength or the amount of energy it took to get those lows. So typically what you're looking for is essentially if we have a low right here, and then we have the stochastic come back down to the same low, we would expect price to be around the same price in both cases. Now, in a different example, say for instance, price came down to here, stochastic came down to here, and then it came back down, it came down lower this time, but in this case, price had come down low the first time, and then the second time it came down lower, but the price did not come down as low. That would essentially give you a divergence, which would essentially say it's taking more energy to move the price less. And essentially that's what your divergence is. And any one of those things can be a divergence. Essentially you're just looking for a situation where the price does not line up with the other various indicators. If you have a low and then another low that's relative, essentially you're comparing those two lows to see. So in this case, our price came down to here, and the price came down to the exact same place again. So we would expect the oscillators or indicators to come to the same place as well. So in this case, the RSI came down. It came all the way down on the last push to 22, and this time it came down and it's only at 28.5. So you would expect there, if this swing, essentially we would develop a divergence because the RSI came down low in this case and price came down to one price, and then the RSI came down but wasn't able to get as low. So there was less selling taking place. There was less strength on the selling side to get this same move down. So what that typically means is you'll develop this divergence off of the swing. Now, that doesn't have to be the case though, because we haven't actually confirmed this as a swing yet. So we could essentially just continue to sell off right now. We could sell off to a lower price, much lower, and still have an RSI come in at a higher point than this, develop our divergence, and then reverse. So you don't want to just jump into the trade. And again, this is not financial advice. I'm not your financial advisor. But, I'm not just going to jump into the trade because we got a dump. If anything, you just got confirmation that we're going to lower prices. Because if you look at our daily close right here, we just confirmed with that previous daily close, we closed lower. We closed at that same level. Okay, so we opened here and then closed below there. That's confirmation to the market. When you get an open and a close below a support line, that's confirmation that it's lost. That's a double confirmation, because just an open is confirmation, or just a close is confirmation. But an open close, you know what I mean? That's like the double whammy. So we got to open and close below the breakdown point of that support that we had previously been holding on to. There was no interest in buying up. It's just a solid red candle. So now what I expect to happen is, maximum push back up to test that 68, 65 range as resistance that we just broke down from. And then, assuming that we even got that, which I wouldn't even expect that strong of a move necessarily, just because we're not showing any strength out of the market. But assuming we did get the test back up to there, or even a wick higher but close back below it on our next daily, I would assume we're going to get continuation. And again, we're still, I don't have the moving averages up right now, but it's still looking like we're coming down to the 200 moving average on the longer time frames. And that's the next thing we're going to be testing on the weekly. So, but anyway, back to the daily here, and again we have the MACD as well, and that's another very common indicator, and we'll be looking for the same thing. We'll be essentially comparing one histogram peak as well as our moving average crosses on the MACD to essentially give us a divergence. And in this situation, you could see obviously we had a strong histogram down to get to this price range, and now here we have almost no selling pressure. There's almost no histogram has developed, and we're at a lower price already, confirming, but essentially same low basically, with much less strength. So what we're expecting to happen is, again, once this continuation takes place and we develop a swing and then essentially get a bounce, we'll have that divergence take place, and then we could get a nice powerful temporary reversal bounce, a dead cat bounce, essentially a relief rally, not by any means a reversal of the trend. We still need a ton of confirmations before that's even in consideration. Although we are at a common area to reverse based on Fibonacci, but at this point in time, I don't see any reason in the market that it's not going to go to lower levels. So we just broke a key resistance. If we come back up, which we almost did, come back up. But if we do come back up and test that as resistance, and it continues to fail to regain that as support, find it as resistance, I would expect us to sell back off and continue just testing until the market till the market finds a place that it's comfortable with. Just remember, the RSI was like down, or the MACD, I'm sorry, stochastic is like down here, and then look, it looks like it's already maxed out, and look how much more selling off took place, and how little it had to move to do all that damage to price action. So just remember, we just broke down and confirmed lower. So I wouldn't just jump right into a trade on the long side. If anything, you would potentially want to start taking continuation shorts to the downside off of any and all bounces, essentially. And I think that's what we're going to see, is every bounce get like violently sold into. So until we do get that powerful one, once some divergence develops over the next few days or week, essentially. So but that's it, guys. Crypto trend trader, a little different look. Not taking a look at any lines or support or moving averages or anything, just looking at the basic, most common indicators that most people look at. So there we have it. Market update. It's playing out just like we've been talking about, and it's probably going to continue to play out just like we've been talking about. And we're going to stay with the trend and stay on the right side of the trades. And Crypto Trend Trader signing off.